Hey guys, so this is Meredith Brown and welcome back to the edition of Homebuyer Vlog. And I'm doing this as a tutorial or education piece, whatever you want to call it. It's not really a tutorial, but it's an education piece about the process and the steps involved with buying a home. And so I'm not a realtor, I'm not a mortgage loan officer, I'm a actual person that is in the process. I'm a first-time home buyer in the process of moving forward. And on this particular video, I think it's like day 9 or 10, something like that. This is the part that I'm still in underwriting. And so if you are new to me on this channel, be sure to click the subscribe button, get that bell so you can get notifications of when I upload videos, because this, to be honest, will not be the only series or information that I share just about home buying. I share a lot of different other things on my channel, mainly around wellness and health. But a big part of health and wellness is the financial piece as well. How we take care of our health is also in direct proportion of financially how we take care of our finances, okay, and vice versa. So that is, I feel like this information and any other information that I share or have shared is going to be important to someone. All right, whether it's you, whether it's a friend that you want to share it with that's going through whatever it is that I'm talking about on that particular video, I encourage you to share it as you wish. All right, and even your children can listen to this. Why? Because our children are literally the future. Okay, I am an 80s born baby, raised in the 90s, and so raised in the 90s and 2000s, and so with all of that, this is a different generation that I'm now raising myself. Okay, and so as decades pass, people learn and the world evolves. Okay, and so what my children will experience or have to experience, even now and in the future years to come, will be totally different than what what I'm doing or what I was raised and how I did things. So I wanted to make sure that anything that I'm experiencing, with this whole real estate thing, it's not going to be so much of a difference than what it is now when they become older teenagers and in their early 20s. But it is still going to be some very important parts of this that will still most likely transcend or be in their generations as they go on to looking for homes or investment properties or what have you. So again, this is the part of my process where I'm in underwriting. So after my loan officer died, a lot of things just kind of slowed down until they were able to transfer my profile. Again, keeping in mind we were on a time frame with the seller. Seller was made aware of what happened, and so the person was very understanding of the situation, and I did my very best that no matter what step in the process, that I kept it pushing, that I submitted documentations that they needed without hesitation, and I always kept them informed if there was anything that I was having troubles getting access to. And so during this phase, okay, the underwriter was asking for support and documentation. They were asking for additional conditions. So my loan ended up getting approved with conditions. So I have an FHA and a Virginia housing. And the Virginia housing one was for the down payment portion. The FHA was for the actual loan of the house. Okay. And the goal of the company and mortgage company that I work with is they always push for 100% financing. So however that comes around, that's what they go with, okay? Unless I agree to something different. So there were some things that came up under that condition, okay? And if you are buying a home, do not mistake it that this will be a simple 1, 2, 3 process. There is a 99% chance that your loan on the underwriting stage will come back with some conditions that you need to take care of. Now, let me explain this. Oftentimes we make transactions in our accounts, our bank accounts. We get random money coming in there, whether it's, from side gigs or whatever have you, and we don't think about it long time ago. Okay. However, when it comes to the mortgage process, they look at everything. Okay. Some things on your credit report will come up, like any negative remarks or reports. They want you to explain that. And the reason that they want you to explain it is not to get in your business and dig deep. They want to see, are you in a position where you're reliable in making those payments? Okay, because when you go from renting to owning, they take in consideration how much you used to rent for and what the mortgage price will be. And they call it a payment shock. I want you to go look it up. And payment shock is something that is very real. It can happen. And that's where mortgage companies have to look at all of that stuff. And I like how they do that, because they want to make sure that from you going from this amount to this amount, they want to make sure, are you going to be able to pay it? Because they're putting this mortgage on the line. Like, they're investing in you. That lender is investing, saying, look, this person has the qualifications. They have the ability to pay. Now, are they going to pay it? Can I trust them to pay? Just think about you asking a friend to borrow $10,000. And what do what would you think that they should ask you? What are some things that are going on in their minds as they give you this $10,000 with the idea that you're going to repay it without reneging on it? So that's where the mortgage companies are with that. Some other things that could come up is some long ago payment or something you forgot long time ago. You just, life happened. You totally forgot it. It just oblivious to it, and it pops up. So what ended up happening, one of the conditions that I had to clear up and pay in full was a state tax from 2015 that got audited. And at first I didn't know, like, I saw this the state on there, right? And I was like, I saw my name, but I was like, I don't have any property in this state. I didn't buy anything in that state. I only rented. I lived there for a while, but I didn't remember accruing any type of properties. Okay, I know I paid taxes and so forth and so forth. But as this became made known to me, I did my research and I found out that I had an old audit bill from 2015 that I totally forgot. Okay, it looks like I had started making payments on it, but life at that point in 2015, I started thinking about all of the stuff that happened around then, and I was like, oh my gosh, how did I not keep paying on this? Like, I should have been paid this off based on the payment, arrangement that they told me that was on there. And it took me so many different numbers to call. And so I think it took me about 2 days to try to figure out where this came from. And once I finally got, and I figured out what it was, I told the lender. They said, well, we need you to pay it in full. However, if you are unable to afford it and they are willing to allow it to be done in payment installments, listen carefully. If they allow you to do payment installments as an agreement to pay that loan off, that bill or whatever the case may be, the lender will then add the payment amount to your debt to income ratio. Okay? So if you're already on the cusp, you may want to say, you know what, I'm going to figure out how to pay this off, get it paid off, whatever the case may be. But I just said, you know what, I just pretty much took my entire check and paid it off. My husband helped me pay off some other stuff with my credit card bills that I usually make payments on every month. Even still, thank God I keep my credit cards under 30%. I actually keep them under 20, which is another thing I'll talk to you about in another video, but and there's plenty of videos out there about credit utilization. And so when I did it, I said, you know what, I'm just gonna pay it off. Okay, it was way more than what was the original amount, which was $1,081. I ended up paying almost close to $2,000. Okay, so that, guys, is just, that was like a shock. And so I said, you know what, I have to own it, because it, you know, when they sent me the documents showing, you know, how this all occurred, then I was like, you know what, this is bringing up so many memories. And, you know, it's crazy how trauma can really throw you off. Like anything that's going on in your life where you're just trying to save face, you're trying to survive, you're just trying to stay above water, and that, you know, goes to the left. And you don't always mean for it to happen. It does happen. So to say all of that is, if there's anything in your mind that you could possibly think of, if you're a first-time home buyer and you're not even nowhere near, you know, pre-approved, I would start doing my research and figuring out what is it that I need to clear up before I do any, something is on my screen, it's so weird, before I start this whole process. Okay, and so that was one of the things. Something else came up too, but I can't remember exactly what it was. But that, because that debt was so super old, they released it, and so that wasn't part. So if you owe debt to anybody, like credit reporting agencies, even down to rental companies, management properties that you've been a part of, you know, long time ago, who knows, just find out. And if you know, you know, eventually it'll come up. You know, we don't think that this stuff will come up, but it does. Okay, the mortgage lenders have access to reporting agencies that are secondary to my FICO and Credit Karma and all of that. Yes, you can see those, but a lot of us don't even know that they have access to other things called Lexis Nexus, Sage, Innovis. These are secondary reporting agencies that are behind my FICO. Okay, and you can get access to that. You just go to those particular websites and request a consumer report, just like you would do on my FICO. Stop thinking about Credit Karma, because that's, don't even do it. Go with my FICO, okay, and get you an accurate credit report so that you can see everything across all three agencies. And then the other secondary agencies, you want to pull those. Go to freeannualcreditreport.com, pull you an annual credit report. Matter of fact, right now, if you're watching this in 2023, you have access to requesting one once a week from each reporting agency: TransUnion, Equifax, Experian. But if you're watching this after 2023, it may just be back to once a year. Okay, so so that was what happened. So I cleared those conditions. All right, I submitted more bank statements because they want to get updated, because again, I had the time lapse from the time my loan officer. So I think a whole nother bank statement had rolled out. Okay, also more pay stubs had to be submitted. That was as accurate up until current, and those were all submitted. And then another thing that ended up happening, so they asked for tax returns for the Virginia housing. Okay, now also on my bank statements, they noted that there were side gigs like Uber, DoorDash, Amazon, and so I don't work for neither of those companies. I do those as extra fund money, side gigs. Some people do it because they need the extra money. I didn't necessarily need it. I just needed something to do, something fun. I have children. They like to do a lot of extracurricular activities. So instead of just all of the money coming from my paychecks, I said, you know what? I can, you know, most likely do that. And whatever it is that they need, then I'll do some of those gigs and pay it, whatever. And you know, along the process of doing those side gigs and doing research, you know, there was, I was able to write some of those expenses off that I use. I didn't even know, some of the stuff you can use. So the beauty of side gigs is that depending on how you're using them, and now go into another video with that, but it's, it was something that I decided to do just to have some fun money. Okay. And it definitely helped with some tax liabilities. Okay. And so I was appreciative and grateful for it. Here was the caveat. Because they saw that, now Virginia Housing, not FHA, Virginia Housing has to verify all income. Okay, that's not payroll related. All income that's not payroll related, even tax refunds. So I had to, let them know that this was the extra income. I had to send tax returns so that they can see how much of a net income, or was there a net loss, yada, yada, yada. Okay? So that's how that works. Now, the crazy thing is that I didn't use that as a way to have my borrowing potential. I'm going to try to make this make sense. So I have a salaried full-time income, and I use that to qualify for the mortgage. Not even thinking that Virginia Housing requires you to verify everything that you have. And so the extra income, some people do use that if they work part-time or they want to increase their amount of buying power. So because the extra income is not sustainable for me, it wasn't something that I'm committed to. Like, I'm sitting right here and I'm like, oh, I don't really have to go. It's raining. Oh, I don't have to go out and make no money today. And, oh, my boys are good. I don't need to do it. But there are some instances that, people do this because their main income, their salary income, is not sufficient for their household. So they make this extra income. And so the mortgage companies do look at. And so what I would encourage you to do is, if you are someone who works and you have a side gig or a side business, speak to the loan officer about that prior to you going into pre-approval, and ask them how would this work out. Okay, and that way you can get all your ducats in a row, versus it getting down to this stage where I'm in underwriting mode. So now it's like everything is, all of these documentations are being requested, and it's all fresh. It's like new. And so that's the process that I'm in. The FHA part of my loan was approved. So now we're just waiting for the Virginia Housing down payment assistance piece to see if any conditions come back from that, because it is a whole different entity. And so they will most likely require additional documentation, just like any loan that you get. I don't care if it's conventional. I don't care if it's USDA. I don't care if it's jumbo. I don't care if it's any kit. Okay, anything that you're asking for, they are going to 99% of the time ask for additional conditions. Okay, and so I'm excited about that. I'm just, keeping my faith that the Virginia Housing will move forward and approve it. And, you have also with the down payment assistance, they have an income qualification. And so that was the other reason that I mentioned the down payment, the extra income part, is because they have to look at that and see, okay, is this something that she is continuing to do? How much extra is this sustainable? Like, what's going on with that whole piece? And so, I'm just seeing if, hopefully that the amount that I made, or if they looked at it, they're like, okay, well, we know she made a little, she made something. How substantial was it versus income and losses? We'll take a look at that. So we'll see how it goes. And the loan officer is going to work with me depending on which way that goes. Okay. So that part makes me a little nervous, because I was like, I just did it for fun. And so, as you do stuff like that, you learn along the way of some of the benefits of doing a side gig. And for you all that work full time and that is your only sole income, unless you have children or an actual asset, your tax liabilities are going to be high. It is what it is, especially if you're single, married, filing single, head of household. If you don't have something that you can write off on your taxes for deductions, whether that's, stocks, I would say invest into that. If you don't have children, because there's no tax credit, child credits. If they don't go to daycare, then you can't write nothing off that off. So a lot of that stuff that it can reduce, the amount that you pay. Those are some of the benefits of, having those side gigs. It's the tax liability. However, if you have an actual business, then they can look at that and say, now, is this sustainable? Like, how much are you making? And then they do averages, a 2-year average, to see, if you could still qualify for that. But that could be talked about in a whole nother video, because it can go real deep with that. But other than that, this is where we are right now. Things are moving a little slow. Probably more slower than expected, even from what my realtor said, but I'm just moving with it. I'm moving with it. It can be tasking. It's daunting. It's exhausting. And I think we're just so focused on getting in there. We just want it done. But I'm just not marrying the house right now. I am enjoying the process. I'm learning through the process, even though sometimes it's exhausting. And I just be like, Lord, please. Or sometimes you just feel like saying, you know what? Is this really worth it? But, if you have faith, and you have people that pray for you, you just sometimes have to say, you know what? It's out of my control. Whatever it is, it's going to be, it's going to be. If it's meant to be, it is meant to be. If it's not, there's always something out there. So I'm just faithful that this is going to be, our moment. This is how we're going to, if the FHA was approved, then I'm just being faithful that the rest of this is going to be approved, or we're going to figure this thing out along the way about what else we can do. And, that's just it's how things are going to be. So, don't get weary. Don't get upset through it. Just be prepared. Also, with any money that you're putting into your account, make sure that it's what they call seasoned, so that there's not many things that they have to ask for, okay? Seasoned means any money that's been sitting in your account for longer than 60 days, okay? Once you go and get a pre-approval for something, do it 60 days away from when the money, like big sums and chunks of money, went in there, okay? That way it's less for you to explain along the way, because it's been sitting there, okay? It's like marinating meat, all right? It's seasoned, all right? It's been there, done that. It's nothing that just popped up mysteriously and magically. And the reason they're doing that is because there's so much money laundering, is so many, illegal money activities, drugs, whatever the case may be, mattress money, you name it. The banks and stuff want to source those deposits, okay? Because they want to make sure that it just wasn't there, or that you now owe debt to somebody else because they just gifted you $10,000 or $1,000 or $5,000, because that's now part of debt. Okay, just think of it like that. If somebody's giving you something and they want it in return, that is now a debt. And the mortgage companies, they look at it, even if you never say nothing to them about it. If somebody gave it to you 4 months ago, guess what? If they asked for it back and they told you they wanted it back, it's now part of your debt. So just look at it like that and be realistic with yourself. But that's pretty much all I have for today. I'll come back on here. We have a re-inspection tomorrow, and so I'll go through that process with you as well. But hopefully this was helpful. And again, if it was, click that like, add a comment, share it with somebody else. I'm just giving it to you from a real perspective, real life example, and hopefully, again, that this helps. Take care.